Hi, this is Lee Reams, back with some breaking news. This time we're going to talk about the COVID emergency relief agreement that was reached by Congress. And we're going to go over some of the more pertinent details. So actually, finally, the political bickering is over. And although some details have yet to be released, and we'll go over those later, here is what directly affects individuals and small businesses. First of all, they actually agreed to a stimulus payments, another round, but this time it's only going to be $600 per eligible adult, down from the $1,200 per adult authorized by the CARES Act back in March. However, this time it also includes $600 per dependent child. The maximum amount is going to be each eligible adult $600, married couple, both eligible, they'll get $1,200. That's the 2 times the 600, and each dependent child will be 600. But as they had last time, there's going to be a 5% credit phase out for AGIs above the threshold. So the filing thresholds for this time is going to be unmarried taxpayer as well as married filing separate, $75,000, heads of household, $12,500, and married taxpayers filing joint, $150,000. Now, the way that phase out works, let's assume we had this married couple with the 2 children, which would normally get $2,400, but they have an AGI of $175,000. So we subtract the $150 from the $175,000, and that means they're $25,000 over the threshold. 5% of that's going to be $1,250, and they would normally gotten a payment of $2,400. We subtract the $1,250, so their payment will only be $1,150, and that's the way it'll work. And you can't have an ending threshold because it depends upon the amount, of course, of how many children they got and whether married or filing separate. So, okay, they also added the unemployment assistance extension, and they extended it for 16 weeks through March 14, 2021. And the federal supplement amount this time will be $300 a week, down from the $600 that's already under the current extension through December 2020. So after the end of this year, it'll drop from $600 to $300, but run through March 14, 2021. They've also brought the Paycheck Protection Program back with some new loans. This time they're going to be targeting loans for small businesses. Unlike last time, they're going to be very specific with this. So this is the important part right here. So only if the employer has 300 or fewer employees, and, this is a very important and, 30% of revenue loss in any quarter in 2020 as compared to the same quarter in 2019. So the business will actually have to suffer a financial setback in order to get this loan. And types of forgivable expenses have been expanded. They're going to include supplemental costs, facility modifications, and personal protective gear to operate safely. And you can see the facility modifications. You see the restaurants are putting up outdoor tents and stuff like that. That's going to cover those types of expenses. And they're going to have a loan forgiveness simplified for loans over $150,000 or less. And expenses paid with forgiven loans proceeds will be tax deductible. This is something we've all been waiting for. Back when the CARES Act was passed, Congress's it was intent. All the Congress people said this. Their intent was that the expenses paid with forgiven loan proceeds would be tax deductible. But the IRS just 2 weeks ago put out a revenue ruling saying that that's not the way they were reading it. They believe that the expenses would not be deductible if they were paid for with forgiven loan expenses. So anyway, we got that straightened out. And they also have an earned income tax credit and child tax credit. You'll be able to use a 2019 income to figure the 2020 credit. This is because incomes were substantially reduced in 2020, and therefore they wouldn't qualify for the credits because it's based upon their earned income and the child tax credits and their taxable income. So you'll be able to use the prior year to compute that credit, and that won't affect their taxable income for 2020. They've also come up with something new here, rental assistance program. And legislation establishes a $25 billion first ever emergency federal rental assistance program. Now, these funds will be distributed to state and local governments, and each state must establish a system for distributing the funds. And the funds will be targeted for families impacted by the COVID, the ones that are struggling to pay rent or have past due rent. And the funds can be used for past due or future rent, or to avoid utility shutoffs. They pay utility bills with it as well. And $800 million of it is reserved for the Native American housing. And the Centers of Disease Control had an eviction moratorium in place, and that legislation also includes an extension of that moratorium through January 31st of 2021. So for a little over another month. Now, we've only included the highlights of this legislation. There are other provisions that will directly or indirectly impact individuals and small businesses. And although he said he will sign it, President Trump must sign legislation before it becomes law. So, well, thank you for joining us, and look forward to seeing you next time. Take care.